right, welcome everybody. Good evening, good morning, good afternoon to everybody around the world. Great to have you here for another Monday live stock market bell. A couple of hours away now from the bell open, but we're only just getting heated up this week, it looks like, with a bit of news. We've even got Kodak potentially now looking great again after, of course, the hilarious wrongdoing suit with the government. We'll just quickly do a bit of a shout out here to people in the community. We've got Buzz, good to see you here. Siddharth, Sean, good to see you here as well. Kadir, Johnny Bravo, as always. Dave, good to see you. And so many others coming in here. Rig, Sang, George A, Swipe, Joel, Bart B. Perfect. Great to see you guys here. So let's talk about today coming into this week. Basically, we have this for the markets. We've got a little bit of red, tinge of red for the Monday morning. Now, will this hold up? Will we see a continuation spike in the VIX? We're talking about that throughout today's session. We'll be adding a couple of indicators onto the S&P 500 throughout today's session as well, talking about what they mean, whether we need to really pay attention to a lot of these indicators, whether they even work that well in the real market conditions. I'll be giving you my opinions on a few of these different indicators, and we'll go through those together, throughout the session. I think it'll be a good day to cover some indicators if we can. Another thing I want to mention was, of course, that we do have a mixture kind of on gold today where it's actually declined a little bit, 1834. So it's found that resistance near that 1850. You can see here 1846 high, 1824 low, 1834 right now. So gold's kind of struggling through its zone, and we've seen that slight recovery in US dollar after hitting lows as well. It almost got all the way down to that 89 very, very quickly. Look at 90.68 on the lows. The US dollar is absolutely getting tanked. Let's have a look at the market here. Little bit of a decline you can see throughout the Asian and European sessions. Go to the 1 hour. Anyone starting to notice a little bit of a potential pattern here? I'm going to go to the 15 minute, and I want the community to tell me whether there was a potential little trade here earlier today. Let's see if everyone knows. Eggsy says US dollar back over 91. Yes, absolutely, Eggsy. So it's doing a standard pullback. We still think that the US dollar is pretty short here. Obviously, that close under 92 was super important. But then we have a normal recovery in a declining trend. Johnny Bravo gets it right straight away there with the head and shoulders. Absolutely, Johnny. Very classic case, kind of little head and shoulders. Nice formation here on the 15. And we could see that it didn't quite go full distance. Let's take a look at this. Let's get that trend line. Take the distance from what the head should be to, of course, the bottom. We should have gone to a 36 kind of 70 handle here. We only got to a 36.74. And it's part of the problem I see a little bit on the smaller time frames. You'll notice in a lot of my analysis, I sit there on no shorter than the 1 hour. Actually, a lot of the community getting this one right. Well done, everybody. So, yeah. Left shoulder, head, right shoulder. And it's not a bad formation. We've got a very strong neckline here. We're back at that point right now. So we're going to be watching this point coming in today's market open. This is why I brought up this chart. I wanted to talk about this, but I also want to talk about completions on the 15 minute. I've been trading for a while now, and I can tell you the 15 minute, while it's not a bad time frame, is not as good as it used to be. It is not as good as it used to be. And the 1 hour and the 4 hour seems to be where I think a lot of a lot of kind of trading by humans seems to be doing quite well, whereas the 5 minute, 1 minute, 15 minutes are just getting tougher and tougher with analysis. And I think that's partly due to liquidity. I think it's partly due to the current market conditions and algorithms in general. But I can tell you that over the years, 15 minute has slowly become worse than it was. It's just food for thought. And if you haven't considered it before, check out things like 2 hour, 1 hour, 4 hour, 8 hour, and daily candles. If you're on the small time frames, there's a lot to be learned, and most people end up going up to the bigger time frames over time through their trading career. So always consider your options, consider how things work, and sometimes even have them side by side. A little bit of a tip that I went through. So thoughts on the SPX, the S&P 500. We'll start with this for the week. So we talked about the R1. We talked about the new monthly pivot being opened here. Monthly pivots are the ones that I use a lot in stock market indices. If you're doing a bit of currency trading, daily pivots work very well in currency trading. They are a tool and they should never be used by themselves. I repeat, indicators like this are not good enough by themselves. But when you bring them together with your other stuff, that's when the power happens. And I remember spending about a year just doing pivots. And all I did was just try to work out all these things based on pivot indicators. And I tried to figure out whether I could get a system on it. I can tell you that at the end of that, a lot of knowledge went through, but at the same time, I realized that pivots can only be used in comparison with price action. Price action at the end of the day is probably what most of you are here for, and that's because it's really the lead indicator, and then everything else helps you get a little bit of confidence in your trading system. So monthly R1 sitting up here, got our central pivot sitting right around that 35.20. If you didn't watch today's video, you wouldn't know those levels yet. And of course, we have had the 4-hour 20 moving average here on the SPX. This is the SPX, remember, the real market here, holding this up so far. So what happens if the market only just declines back down to this level? Will there be buying pressure there? You would think, at least in the smaller time frames, there should be some buying pressure there. I would like to think that we're about to start into a possible pullback decline here in the markets. Now, what we had really over the last couple of months, since especially the US election, has been a pretty overly aggressive market. Can it go further? Sure it can. The price action says so. But that doesn't mean that we don't want to look for cracks. And I think there's a crack starting to appear in the ASX 200. And because we have usually a lot of Australians joining us early, let's have a look at the ASX 200 straight away. We'll load that up. We'll use the CFD data, go down to a daily, and then we'll go a little bit lower. And this is where I'm starting to look on the smaller time frames. Now, right now, we're looking at 66.74. Nothing to really note. But we did get a bit of a rejection candle today here. And you can see we've got our peak, got our kind of equal peak. So these are our peaks over here. And then we've got our intervening trough. So this could become a little bit of a double top. That's something that I'll be looking at for as an Australian trader. 6,500, 6,510. I'll be looking at this if we do see further declines in the US market tonight. Specifically, there's a whole bunch of things that could be happening. Anyone out there trading iron ore at the moment? Feeling pretty good about the world? We'll see. Let's go over to the chat room and talk to you guys, the community. Pointy head and shoulders, says Siddharth. Roughly on my chart. Morning stonk talk, says David. Nothing better than good stonk talk, David, especially at the moment when everything's all green, all good. Johnny says BTC was bouncing off the 15-minute EMA over the weekend. That's how I traded it as least. There's no problems with the 15-minute if you see a defining trend, Johnny, and it works quite well with moving averages. What tends to not work as well sometimes is pattern recognition, especially in the direction against the main trend. So if you have pattern recognition, let's say we have an uptrend like here. It's a great example. We have a declining market and we see an inverse head and shoulders on a 15-minute in the direction of trend. It's actually going to be pretty good most of the time. In fact, it's going to be better than pretty good. That's going to be a highly likely statistical chance. But when you use smaller time frames to try to predict the end of trends, let's say this is a 15-minute and we were shorting underneath this double top here, it would not be very strong and would have a tendency to stop short. So I like to use the bigger time frames, at least 4 hour and above, when trying to predict the end of a trend. Never try to predict the end of a trend or short against the market on the smaller time frames. It's a good preface there. Dividend Cake says 15-minute is only for entry, not for analysis. Yeah, 15-minute is incredibly good for entry, Dividend Cake. Good point. Like we said before, maybe you've identified a 4-hour trend up and you want to get into that. Maybe there's a good little 15-minute double bottom here. Let's have a look, actually. Opportunities arise on the 15-minute in the direction of the trend, and that's the really key point there. So here we've got, obviously, a little double bottom. There's the little kind of conservative entry if you want to get in, and that's your entry point that you can use in the prevailing trend. Very good. Gianfranco asks question, ETF are secure nowadays. So I assume you're talking about exchange traded funds. Yeah, look, they can be. Exchange traded funds is a broad concept. So don't think of every exchange traded fund as being the best thing since sliced bread or incredibly secure or anything like that. But make sure you go with providers that have been around and of course have a good track record. At the end of the day, there is usually a process behind that, but exchange traded funds are still in some form of infancy in terms of the size of the market. The market is becoming huge. The market is becoming huge. Krunel says, sup Tom, sup Krunel. Good to have you here. Johnny Bravo says, my theory is we won't correct until value starts bouncing off their June highs. Look at almost any oil, REIT, or financial, and we're all coming up to the June highs soon. What a great point there, Johnny. Let's have a look at one, and I think we'll go with Bank of America. So we'll go with BAC to start off with. Let's take a look at where BAC is. Now, notice where we are. What Johnny's talking about is we had a melt up. Basically, this is a common trap bounce. Some people call it dead cat bounce, this kind of concept and things like that, that happens during a normal recession period. We get an incredible decline followed by a massive spike up, and then generally you get a test of either a low or possibly even a new low if you're in something like a GFC. Now, this time round, it wasn't like that because of what the Federal Reserve did. We had the decline, we had the insane spike up, and then we had the reality. And the reality on the bank shares was not as good as the reality, of course, on the tech stocks or anything like that. But we're back at these previous highs. And I think you mentioned this today, Johnny. You were talking about these previous highs being key, paramount kind of areas for us to see rollover. And I tend to agree because these are the stocks that the market is now saying, okay, we're in recovery phase. The value stocks, value, inverted commas there, these stocks are the ones that we're now getting into. And usually these have a pretty good run for around 3 to 6 months. So what we're looking for here is that this resistance basically holds up. We see a sell-off. And to know there's a proper correction in, we want to get it underneath this 20 moving average and underneath these previous kind of peaks. Let's just quickly get that line up for everybody. So we're looking at about $28. For a breach of $28 and under, that's going to show us a more significant decline in the broader market, even down to 26. And it will really be through most stocks. If we look at something like ExxonMobil, nice recovery here. Nowhere near, of course, the highs. There are reasons for that, being energy, but back to a very important point of resistance. Anyone remember when we were talking about this 41 being the initial sell zone? Certainly was. It actually sold off all the way back to 38, provided another opportunity, and is now testing the high again. So very, very nice there. Mostly the bank stocks are probably showing us, though, the areas of pullbacks. Now, I think like Wells Fargo is not going to be showing it. JP Morgan, have a look at that quickly. JP Morgan a little bit higher than the previous resistance. So a little bit more of a recovery. You can see today 121.65 pre-market here. So start to look at these stocks, these indices, especially energy and probably financials in terms of the sector analysis, for clues on a declining market with a proper correction in it. We'll be going over that more on the YouTube channel. Dividend Cake says Euro odd setting up for short. Well, I'd like to show the community actually a really great setup I saw today. Let's have a look at the pound odd. Now, obviously this is going into news, but let's just quickly talk about the price action coming into this news. Let's talk about that, because it's the same kind of price action you're going to see on stocks, same kind of price action you're going to see anywhere. Here's an interesting thing. So we've got what I would definitely be drawing as a descending triangle here on the pound odd. Now, I drew this up today. Let me see if I can grab it for everybody. Just grabbing it now. Bring that onto my screen. And I put this into the private Discord community. And I just showed here The declining market, obviously an area where I expected it to close below, and then I showed the reason why. And I showed this shooting star rejection candle. So you can see these were taken before the fact. So in terms of why I think it's important, we had the price action declining here off, of course, the previous resistances. We had a resistance or a peak. So we had a peak, lower peak, lower peak, lower peak, lower peak. But this time, more aggressive sell-off than any of the other lower peaks. What's this telling us? The market is weakening and it is constantly putting tons of pressure on the support. Remember, yes, we all know this is a descending triangle. We all know that, guys. A lot of people out there probably understand this, but do you understand the price action around it? What's it really telling us? It's telling us a weakening market, and specifically on this last candle here, we had an incredible weakness. A massive amount of shorts came in, and then, of course, we got the further confirmation of a new low, easily broke and closed below on the smaller time frames here, and then go straight to the first point of support. And now we're probably going to pull back up, test it from the bottom up, and then, of course, potentially decline some more. So it's thinking about the price action from the perspective of what is this last candle telling us? It's telling us the shorters are there. The shorters are committed. They've given us a shooting star. Remember, shooting stars suck, but they're good in the right locations. So I thought that was a good lesson for today to go over. Very cool opportunity here using multi-time frame analysis. You go down to the smaller time frames, you'll notice this level holds heavily across most time frames. You find the lowest time frame where it's holding the support, and then you can possibly get into a nice little day trade scalp. And it also meets our criteria, being a European and an Asian kind of pair during a Monday, a very tough time to trade often. Gio Franco says, I am looking for shorting Tesla. Now, what do you think about that? Wow. You are a braver man than me, Gio Franco. So Tesla is the enigma share. Basically, it does bullish things and it continues to defy a lot of people. There was people, if you can believe it, there were people shorting Tesla heavily here. There were people shorting Tesla even more heavily here, all the way through this. Tesla has defied gravity. What's the price action telling us right now? Well, it's giving us a bullish opportunity. If you want to short shares, that's fine, or stocks, as you would call them. But the thing about stocks and shorting them is it's way harder to short them than it is to long them at the right opportunities. So something with Tesla, yes, it's testing resistance. Yes, we're seeing a 605. We've got a 606.50 kind of resistance. But for my kind of way I look at these markets, I would be going into the smaller time frames and looking for a real sign. Do we have a sign of shorting here other than resistance? Not really. So if you're prepared to take the risk, sure, but you're not allowed to just be able to constantly move back, because eventually that's going to probably be the thing that blows your account. What you really want to be doing is looking for price action based systems. Price action where it confirms a new trough after making maybe two equal peaks, little double top here on the 1 hour maybe, something like that. And then that might be your trigger. But try to always, not pick the top and instead pick the price action in your direction. It's a bit of a hint there, I think, for you. In terms of what I think for Tesla this week, it's testing the resistance. Really, it's going to probably follow the market now. It's kind of moved to the next zone. And if it breaks through here, then just like any good Tesla move, it usually likes to jump heavily to the 50, being the 650 or the $700. Might sound insane, but that's what happens. When it makes new highs, it goes to the psychological numbers, regardless of whether it's a good valuation or not. Unstoppable Trainer says, about to break all-time high. Absolutely unstoppable. You cannot, as your name says, Tesla is unstoppable at this stage. It will eventually have a blow off, but not necessarily now. We don't know when. But yes, the PE is insane. I understand that from a lot of conventional wisdoms, this stock is crazy. Roman says, Tesla is looking super bullish on all time frames. Absolutely, Roman. Look, it will have a decline at some point, but the thing is that the price action still says bullish. Do you follow the way pound and odd falling? Yes, absolutely. The pound odd is certainly falling, and it's pulling up a little bit now back to possibly those lows. Siddharth says, I just bought Tesla at 600 10 minutes ago at 606 now. Shorting stocks is a cancerous mentality. Shorting stocks is way harder than buying them. There's just no doubt. Like, think about it. Every company that you're trying to short has people employed to try to make them more money. It's inherently a long vehicle. So when you try to short, yes, you sound like a god. If you get it right, you're like, I'm the best. Look at me, guys. I picked Tesla at 606 to go down. Look at me, I'm the best. But how many times did you pick it wrong? We've all been there. I used to love shorting everything. My favorite way to short was always put spreads or like some kind of a spread-based option vehicle because I like the fixed risk of it. But at the same time, it's way harder. It's just not as cool to buy the stock, you know what I mean? To buy the calls, to buy the spreads. It's way cooler to say I picked the top. Who's that guy that I always forget his name? Why do I forget his name? I know he made... Everyone thinks he's a god because he picked the market and made a few bill, I think. But then he did it again, and he's wrong now for 200 points. Will he be right? Possibly. Okay, just a couple of things I'd like to housekeep as well. Unfortunately, we've got a bunch of scammers floating around. I just want to let you know, as a community, this is not me, okay? So there's somebody here that says it's posing as FX Evolution, and they're asking you to message their personal account. So please make sure you do not do that. And you do not follow any personal supposed person that is us. It is not us. I've reported them. There's 2 of them so far. I assume there's going to be more. So unfortunately, this particular person, whoever it is, if you go to their link, like is in their username, and they're not us, and they're something else, I would suggest you report them. YouTube is completely out of hand. Look at this. Another spammer against someone's comment. It's ridiculous. The amount of spam I delete per day is insane. So if you see these ones, unfortunately, they are not us. There's some guy trying to scam people, and it sucks. Michael Burry, yeah. Yeah, Ackman was the one. Yeah, so Ackman did the big put spread. And you know what? Credit to him. That was a really easy call, even in hindsight. But I mean, for him, it just made so much sense. It was a great call. And, you know, he put a lot of money into it, which is awesome. They're called basically they're like mines. So you throw those kind of spread mines and things like that in when you think that the markets are a bit cooked. So say right now you might think the markets are cooked, and then you put in, you know, puts could be very, very cheap with spreads really low. And sometimes you're going to get one of those right. You might chuck away 10 of them or 20 of them, but they pay off maybe 50 or 100 to 1. So you can see a bit of resistance coming back into the US 500 futures here, right around that neckline of the head and shoulders. Let's now talk about the other markets though. We'll go into some stocks, so please do give me some stocks that you want to look at. I saw a few out there, but we will look at probably the biggest ones. Like, we like to look at ones that probably help the community the most, and make sure if you've got one of those that you post it into the room. Got a new setup here today. If anyone doesn't have vertical monitors as well, I do suggest vertical monitors. They're really excellent. So I've got a central monitor. This is my home setup. So I've got a central monitor, a monitor on the left, and then I've got a vertical monitor, which is basically just monitor in portrait mode. And it's really good for your chat programs like your Telegram or your Discord, or of course, in this case, YouTube chat. So they're excellent to have there. It's good for the productivity side. Oh, quite a few stocks coming in. Yeah, we'll have a look at a whole bunch of those. I see Baba, Neo, a few others as well. No worries. We'll check those out. Let's go to gold first, though, and talk about gold. So gold came off the 50 EMA. We know this. We've seen it a few times. 50 EMA, 1, 2, 3. Cool. That's excellent. That was in the past. Now what for gold though? So it's basically hit the 20 moving average on the daily. We see here resistance. It's finding some resistance right now, and it makes sense when we look at the dollar index. So whenever you're looking at gold, generally speaking, although it decoupled a little bit last week, we're usually then going to have to look at dollar index. You want to do your dollar index analysis. So if we go to the daily on the dollar index, you can see we're quite far away from the 20 here. But one thing I'd point out, one touch, resistance. Two touch, resistance. What do we like about the third touch if it happens? Probably going to be resistance. You've also got the cushion of the 92 if it came up very heavily. So there's already some selling coming into the dollar here, but 1, 2, if a third one happens, even if it consolidates for a bit, most likely some resistance is found there. So something to be worthwhile thinking about. Let's have a look at the 4-hour price action here on the dollar index. Got up to 91.20, then really shot back down to 91. Go to the 2-hour time frame chart. There was that little bit of consolidation we talked about in today's video. It's a good 1-hour trade here. Get that little bit of a bottom formed. Get the stop hunt formed. This is the stop hunt type of wick that you usually see, especially when that's followed up by big bullish momentum. That's good. And then, of course, we have that little bit of a conservative pickup followed by some bullish movement. We now got a 2050 cross as well, which is the first time we've seen a 2050 cross on the 1 hour. Wow, since over here. Since the 24th of November. So it's been a very heavy sell-off. Not one cross of the 20 and the 50 exponentials, and now we have got them. So I don't think it's easy to tell what exactly the dollar index is going to do now. You'd be able to say, okay, well, it hit this level of support, it's found resistance, it's got a shooting star, it's got some sell-off. I'm not convinced by this type of thing. I'd be convinced more if it came up to a daily 20. I'd be convinced more if we see a bit of chop here and it creates another kind of channel or range and then breaks out. Right now is what I say is a very difficult, if you're going to say which one you're more accurate towards, well, you'd say go with the trend, go with the shorts. But at this stage, I think it's very difficult to think you could pick the direction with higher than kind of a coin flip accuracy. This is not the zone I'd be picking it in. That makes some type of sense. So dollar index not giving us too much. Back onto gold though. Gold is certainly at the point where you expect the bears to come back in. Now, if the bears fail here and gold ends up above 1850 tomorrow, is that bullish? Yes, it is. It's very bullish in my opinion. Why is that? This was a serious break of support. It was not only just through these time frames. Look at how this looks on a larger time frame. This is very easy for everyone to see on the daily. A break above this is then going to probably go into a 50 exponential, come back down. 1850 would then act as, you would hope, support, and a little lightning bolt on a smaller time frame here to the bull side, I think could be a very nice move for gold. But I totally understand why sellers are here. We're at the 20 exponential, right around the 1850. It's probably worth the risk and reward to be having a look at those kind of sells if you're at those levels and that's part of your plan. Why not? It's technically the conservative selling entry. Silver, very, very similar. Silver declining a little bit here. Didn't really stop anywhere in particular. Remember, silver markets, I usually look at the double zeros, things like 23, 22, 24, 20, all of the double zeros are keys, and 50-cent increments for silver as well. Not too much to really mention here on the 4-hour. Daily, again, we've got long-term alerts at 26 showing incredible bullish intent. That is going to be the key level for me, and anything under 22, of course, I think it's going to be a free-for-all if the market gets under there. So if we got the market under here and it broke through, silver has no structure for ages. Look at this structure. Look at this structure, guys. It sucks. That's what I call crappy structure. It's like AMD. Look at AMD, the stock. Been great off this level, hey. But imagine if it failed here. Oh, it's bad. all the way down it goes. And it was unlikely to stop bleeding. It would have bled all the way down to this $58, $60 zone. That's how bad it would have been if this area didn't hold for AMD. But it's all green, all good right now. And it's looking quite strong. AMD are going to have a great sales quarter. Best CPUs in the market. I saw some people mentioning Intel before. A few people want Intel, Bitcoin. Yep, we'll look at Bitcoin right now. We're doing our general analysis. Then we'll look at Neo, Nikola, Baba, all the rest. So gold and silver, that's our thoughts at this stage. Bitcoin. Now, Bitcoin continuing to do its little churn through a pretty nice range, pretty big range. So a few things we drew up today is we're drawing a bit of a trend line through there. And then we're, of course, putting our horizontal line through this area here, really the 1850, 1860 in terms of closes. I do prefer the body closes than wicks, but we do know that the psychological numbers are usually around the 500s for Bitcoin. So it's finding some support here. We'd like to see the bulls come back in and support Bitcoin right now, but the longer this does its little thing and churns around here, remember when it breaks out above the 19.6, do we expect it to stop at 20? I don't. I would expect it to bust 20 hard. And the reason why is because you don't often see a coiling market break the coil just below a key psychological number and then say, we hit 20. No, it's all right. We're done. That's not usually what happens. It usually kind of just goes bang straight through. A coil below a key level, usually priming for a nice breakout. Do you follow the way? Dollar to 120. Damn. Do you follow the way? Are you like a Federal Reserve chairman or something? You'd have to be pulling a whole bunch of print off for that one. I'd be interested to know your thoughts on that. But yeah, dollar index, if we have a look at where that would put us, 120. Let's have a look at the monthly chart here. 120 is up here. So that's back to 2001 highs. At this stage, really, the Federal Reserve is committed to having a pretty crappy dollar. It's a fight to the bottom, really. So there's no surprise that we've got weakening dollar. We're also about to get a 2050 cross on the monthly. So our thoughts on Bitcoin, that's really it. It's coiling. It's doing the right thing. Bulls shouldn't be concerned about what it's doing right now. This is not even a very deep pullback. Even now, if you think about a pullback coming back down to the low here, what's it going to be intersecting? A 20 moving average. What found support last time? A 20 moving average. So I don't think there's too much to be concerned there. Let's have a look at ETH US dollar. Quickly check that out. We'll use the Kraken here for this one. I think Ethereum has even better kind of resistance level. I love this line. This 620 line is just so good. Anyone else have this line? Did you guys have this line out there? 620 horizontal, no body close through this area. A wick, 2 hour. Let's have a look at the 1 hour. 1 hour did fake out, so we won't be using that one. What about 4 hour? 4 hour also good on this time frame. So 2 hour, 4 hour, any of these time frames, close above would be pretty significant. And we're looking for a close above, pullback, 1, 2, 3. Resistance signals most likely a move to the next zone being 650, then 700 for Ethereum. Very nice little setup here. We don't want to see it fail. A series of higher lows. We'd like to see that continue on. Just realized I lost the chat there for a second. Let's go through some more questions here. Everyone seems to have Neo. It's true. All right, let's have a look at Neo, guys. Why is it that every single person on my chat is in Neo? I don't think I've even done analysis outside of our live analysis on Neo. Anyway, yeah, look, this is still, well, it's been doing the same thing for a couple of months now, hasn't it? Hovering around these. Now, it had that acceleration, if I remember rightly. So we had that acceleration to a 4-hour 20 exponential, and we were following it up via that. It's now failed that. Let's go back to our kind of points of last resort. We have a daily 20. I would argue, this is tough. I would say it's probably going to fail it today. But we had a gap close or gap open below, followed by mass bull momentum trying to get it back up. Now we've had the first close under the 20, and you can see here, pre-market, we're looking at 41.10. So from that aspect, this is the first time it's really showing levels of failing this bull run. So let's have a look at the weekly. Weekly's pretty far away from the 20, but not exceptionally crazy far away. It's been an aggressive run. Let's have a look at the monthly. Very far away, but that's usually pretty normal. The candles aren't that much bigger. We do have some gaps though here. So we've got a leap out of the gates, a leap out of the gates, a bunch of leaps all the way coming up to this event. Now that's important because if we consider all these leaps coming through, we consider all of these gaps coming off Mondays and stuff, we know it was a really aggressive market. Do we have any signs of severe weakness? I guess I'd be looking at this 39 zone, also the 50 moving average, and I would be saying I'd want that to hold if I was a bull right now. Why? Because every indicator is going to be screaming, oh my goodness, this is overbought. Let's just chuck one on. Let's just chuck one on for interest's sake. So we'll chuck on RSI. All right. And let's have a look at weekly RSI. So it was super crazy high, almost tapped out at the 100, and it's come off very substantially recently. The daily coming right back down. In fact, it's now declined more than any previous time. So the relative strength is not doing well right now. Now, if we have a think about this level, this is where the bulls must control it. The 50 exponential, the kind of $40, $39, $38 zone. If it gets under there and closes below, I think you could be seeing quite a lot of selling pressure. People will start to panic. It's the nature of the people invested in this, which is us, the retail traders. So 39, 38, 50 exponential, all very important areas to watch. We'll check that out coming into the live analysis. So we'll leave NEO over here because it's actually a pretty interesting chart. Johnny Bravo says flock mentality on NEO. It certainly has been the flock. And because it's the flock, it will trade like the flock, which is when we have a decline, people can't hold on. They don't hodl this. We'll call it like a cryptocurrency. They don't hodl this stock anymore, and they all start dumping it. And the pressure comes out, and that usually is when you see the blow off. The other suggestion we had, or the other question we had, was for a stock which was Nikola, another one of our favorites here on the channel, not really. And you can see that when it broke through, it just went bang, sold off aggressively for a couple of days, came back up, retested from the lows, this support. You can see around there, around that 55, and then it was all over. So be careful of this on NEO. Is it overpriced? Probably on many fundamentals. But yeah, a lot of people are probably getting into it just to trade it off. Keep life simple. NEO doesn't even earn money. At some point, that's definitely a problem, yes. Susboy says, Michael Burry says, short Tesla. What do you think, Tesla? We had a look at Tesla before. It looks bullish on all timeframes. That being said, it's testing resistance today of the previous peak. If it gets through here and closes above, you would expect more further bullish momentum move. If it fails here and it starts selling off, look for little double tops. There is some market structure around this high. So definitely check that out. What do you think of the ASX 300 for a couple of days? Yeah, we can check that out. I don't really look at the ASX 300 very much. You trade in the ETF of it. Is it even here? I'm not sure if I think we'd have to probably look up the ETF code. Give me the ETF code for the ASX 300. Oh, there it is. All right, so ASX 300 looks the same as the ASX 200. Basically, we've got resistance, spike down today, exact same as we said before. We're looking at a potential double top here. But if it just comes back to the 20, notice how the double tops always intersect a very important moving average, usually the 20 or the 50. If we get underneath there, we see further selling. I wouldn't be surprised at all to go back to 6,200 on China tensions. And if we hold this level, let's say we do decline a little bit here and move up, then of course, all green, all good. The only important zone that matters is basically that. And of course, a new high. Everything in between here is just coiling good news, really. Pretty simple, I think. Remember, TA is not about saying I know where things are going to go every single second of the day, guys. It's trying to make informed decisions at correct areas that are statistically likely. If someone says to me, and I get it all the time, hey, Tom, well, not anymore, I don't get it, but I'm going to Hawaii. Do you think I should buy American dollars now? I'm going in 6 months. What do you think? I'm like, what the hell are you talking about? I don't know, dude. Like, sometimes you will, but I'm like, what are you talking about, guys? Like, you're transferring how much? Like $2,000? Like, you know, I don't really care. But the point is that people ask me that question all the time. I don't know where it's going necessarily all the time, but when we get good breaks and key levels, that's where you statistically are giving yourself an advantage. Neo and Tesla both have that kind of thing. Except Tesla's looking stronger than Neo. What do I think about the Russell 2000? I haven't looked at that one in a while. So there's another indice. Obviously 2000 small cap company in the US. Wow, it's very bullish. Very, very, very bullish. Crazy. Well, there's not much to think, really. If you're looking at something like this, you want to put on things like Bollingers if you believe it's getting too crazy. Oop, we don't want that Bollinger. We don't want these ones. Get rid of these ones. You would think you basically use things like Bollingers. You see whether you're really far outside of Bollingers. If you are willing to buy outside of Bollingers, then that can be a strategy you use. But I would say this is something I want to get onto tonight. And we'll be doing it in tomorrow's video, so definitely stay tuned for that one tomorrow. Bollinger Bands do matter. When you get outside of the standard deviations of Bollingers, especially on significant time frames, such as we are right here, look at this history, okay? How many times are we truly holding outside of the top of this Bollinger? Throughout all runs, throughout all of the time. Even on the short side. It's very tough for it to hold out, even aggressive shorts such as the GFC. The Bollinger obviously is a moving thing, but we've closed outside, and this entire month so far is outside the Bollinger. It will pull back because of these reasons. The Bollinger cannot be ignored. And that's all I could say about this Russell, is the Bollinger can't be ignored easily. Look at the SPX, guys. Let's get rid of this number. What is this? The Bollinger was outside. We had the sell-off. The Bollinger started to go outside, pushed higher, pushed crazy high. Look at this. Look how far outside the Bollinger it was. And then, of course, even if we didn't have this year's crisis, this Bollinger was pushing way too high. There was going to be a decline. It wasn't going to be like this, but it was going to be a decline. Big Bollinger move out, followed by pullback. Throughout all time, whenever you get these Bollingers outside for too long, you get a pullback. And let's say you called it here. Let's say you said, well, the Bollinger's out here, tell me you're wrong, it went up more. Look how the decline happened. The decline was way bigger than the Bollinger coming back in. So don't ever, not look at the Bollinger. Try to use the Bollinger, though, on the real market, SPX. So my thoughts on the Russell is basically, yes, it's outside the Bollinger. Yes, it's a crazy move. It's most likely due a pullback, all those things. What about the June? Johnny? Keep life simple says price stays inside the Bollinger Bands 95% of the time. Yeah, it's a good stat. But closes outside the Bollinger are what's important. It's not the wicks. It's these closes. When you get these crazy closes outside, usually that signals the market is FOMOing out of its mind. FOMOing out of its mind. So at this stage, we're getting right on there. We've FOMO'd out and we're moving higher right now. The higher we go, the faster we go, the more chance of a bigger kind of blow off event, which is, you know, more a significant kind of decline. Not down here though. Intel, can we look at that? Yes, we can. So many things to look at. Gareth, I think you wanted to look at copper. Might be able to check that out as well. Dr. Copper is one of our friends. Let's have a look at copper. I would say I've stopped using copper recently because of the pure manipulation from China on this particular one. We're just seeing way too much purchases from China. Look at copper. $3, what is this? 48. Damn. Copper being strong recently. And that's great. Like, we're all good with copper being purchased. We knew copper was going to be a strong kind of commodity. It was all in line with our stuff. But I have a suspicion that, like iron ore price, all of these prices aren't necessarily true to maintain demand. And what they are is they're more stockpiling of resources for something in the future. Check out this chart of Rio. This is an Australian iron ore stock. Okay, look at this. Look at where it is. 116. Look how far outside the Bollinger this thing is. It's just like, woo, let's go. It's all good. Random spikes in iron ore demand recently. Definitely worthwhile considering. By the way, thanks very much for the subscription there. I may actually just need to test this widget. Let me just quickly test this. For anyone that isn't a subscriber that's watching us right now, definitely consider subscribing and supporting the channel. We do appreciate that. So yeah, Rio's gone crazy. All right, Intel C. Let's have a look at Intel Corp. Big move up here. A few people asked about this one. We'll get rid of these Bollingers for now. When do you like buying these kind of decrepit looking stocks that have not done well? I usually tend to buy them out of these kind of breaks where we have a test of a low. We have kind of so we've got a trough, got a higher trough here. We've got a peak and then we break through that. What that's telling me is we've got the lightning bolt on a better time frame, like a daily. It's here that I like to actually enter. A lot of people will be like, yeah, I like to buy it here. I like to enter here because this is where you know you're unlikely to have money stagnant for a long period of time. Look how long it's stagnated over here. I don't like that kind of market so much. I like to be in, get some aggressive kind of bullish action. Now, is this insane for Intel's move? Well, Intel's been pretty poor recently. You know, technology aside, this price action looks pretty strong. Got a 51 kind of pullback here. It makes some sense to struggle around this area, but it should probably come back down if the market comes back down. And I would say this is a pretty key zone. I like this zone quite a lot. I'm going to alert this. Just kind of come back and have a look at it later. So let's say we get a decline. What are we going to be met with? 20 moving average, 50 moving average on the daily. Previous support before the second decline as well. All of these areas are going to act as most likely some form of support and we get buying pressure. Do I think it's great here? Not really. Do I think it's selling here? I don't know. I don't know that much about what it's doing right here, but I know that this is a zone that makes some kind of sense, and this makes a zone sense for profit taking. Previous support, resistance, kind of weird area, resistance, support area, take profit zone. Slight bounce through, possible pullback, followed by maybe a return back to 55. Intel's interesting. Audax says, everyone says that, so probably not. What are you talking about there, Audax? You're talking about the iron ore buying and stockpiling. Yeah, everyone can say something, but it's like this year with the crisis. Everyone knew that it's hard to keep something down in terms of, a flu style kind of problem. But we still all sat here and saw markets move to a new high. And then all of a sudden it was a big problem, and then it wasn't a problem because of the Fed. So things can happen. Shorting generally, I mean, you can use CFDs and stuff, but I guess one of the safer ways is always options, but then you need to get good on timing. And you want to use usually spreads, those kind of things. Definitely look into it yourself, though. IBM, Franco, you got some interesting stocks there. We have not spoken about IBM on this channel before. I have, but no one has ever asked me for it. Johnny Bravo says, Xmas around the corner. The pressure is on the government to do something. Most likely, yes. The pressure is on them. I've usually found, though, it takes a little while. Keep life simple says, holy crap, Rio. Yeah, Rio's wild. All of the iron ore stocks are crazy. BHP 42 again. DocuSign. All right. Baba and DocuSign will be done. So these got a upgrade, I believe. This is a pretty good level of resistance. I like the way it's kind of found the resistance before. We've got resistance, 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 and now we're trading 240. So interesting here, we have a decent bit of news. It pushes it up, it fails to hold it, and then it declines that zone. What that tells me is, firstly, I like this zone. I like this resistance zone. Now, if I'm looking bullish, what are my levels to buy? Well, my levels are going to be struggling here, yeah? Because we're right at the resistance. If it comes back down to our level of support, we've even got on this line, because we've had it here multiple times, or even the 200, maybe we're interested in it. Fundamentals possibly making sense. Remember, fundamentals and technicals together, that's awesome. We love fundamentals and technicals together. So we have the resistances here. If we move up and close above this zone and then get a quick pullback back down to it, the resistances should act as support as per roll reversal and give us an amazing opportunity with confirmation as well. That's cool. But I like how the news comes out, everyone goes crazy about it, and then all of a sudden it's like, no. Traps all the retail traders right around that resistance. Definitely watch that 241 kind of area. Worthwhile checking out there on DocuSign. Let's bring up Baba. Another one that we've had quite a lot of requests for. So Baba, I think, is struggling with, it's kind of like in the firing line, I guess you would say, for quite a few political tensions here. And that's what's making it tough. But 265 is right around the support line. We talked about how we do not want it underneath this last low. So basically we had a movement up, found the dynamic resistance on the 20 and the 50 around the 280, kind of thought that might be a sell-off area. Go and check out last week's video where we discussed that some. And then we've now got a further decline back to 265. So what you're looking for now is possibly a test of the low. We want to see some level of support being found and smaller time frame lightning bolt to the buy side. And obviously for the bulls, longer term, you get through 280, worthwhile setting an alert for that just to make yourself feel good. If you get through a 280 and go bullish, that's going to be a very nice little double bottom there if that was to occur. So your scenarios are here, it comes down. This is the important zone. We want to see lightning bolt up. If it fails here and continues down, then obviously that opens up way lower, possibly 225 resistance support kind of area. That wouldn't be very cool if you're a buyer, but that would be the area. And at this stage, we're in the middle of nowhere. We have no idea whether this goes long or short right here. We just know that this is a critical level and this is a super critical level. And as soon as it gets past 280, you'd be thinking 300, possibly even 320. Underneath this zone, you're thinking 225. That's my thoughts. Remember, critical, 2 areas, noise in between. Conrad Jupiter 77 says, which broker do you go through, Tom? So I like, well, obviously we work with Pepperstone for Forex and commodities. So we definitely recommend Pepperstone. I believe they have some of the best support in the industry as well, which is awesome. And in terms of stock, if you're in the US, look, I guess we're recommending Webull at the moment as an option for you. That being said, I personally cannot use Webull and do not use it because we're in Australia. So I use one of the big 4 banks. But I have a different kind of feed. So it's a little bit, it wouldn't be worthwhile recommending that to you. There are other options and other things I'm working on though for you guys for different places around the world. I usually only recommend companies that have some kind of good backing. I am a big proponent of trying to put your companies or put your money into companies that have some form of safety or at least perceived good safety. I've seen way too many Forex brokers go bust over the years as well. Siddharth Morley coming in with $3 and he's got the sticker My Hero. Thank you very much, Siddharth. Appreciate that, man. Appreciate you for all the support and also more importantly, deleting all those robots on our YouTube comments. My goodness, the robots are psycho. Just a quick reminder, we do not recommend to go to a private FX Evolution page or anything. There is unfortunately a few people out there at the moment that are trying to use our name to, I guess you would say, scam people. So do not fall for that, guys. Ethereum, we looked at Cassidy, go back about, this is for Cassidy Power. Ethereum, go back about 20 minutes. We checked that out. Unless something's happened on Ethereum since then. What is Balkrasind, Criminal? What is that? What the? I don't even know what this is. Auto part manufacturer. All right. Well, it looks bullish, dude. Nice support off here. This thing's gone crazy. Obviously, 1500. You'll have, if it does pull back, this area here, you would think there's going to be resistance and a 20 moving average. We know it's found support there once before. That'd be kind of cool. In terms of where it goes from here, though, I mean, this is a weekly already. The thing's just bullish looking. It's been bullish looking for quite some time. The deeper pullbacks seem to have gone to the 50 exponential, but that's very rare on the monthly. There's nothing really else to point here. I mean, put on a Bollinger, see if it's outside if you're worried about how it's moving up. It shouldn't be because there is some consolidation here. But yeah, looks good from bull side. PFE. All right, well, since we're taking requests, we might as well check out all these ones. Check out PFE, and then we'll go back to some others. So nice break here for Pfizer. We basically saw it have the crazy news, and then it went crazy and sold off. Typical kind of trap. I'm pretty sure that Warren Buffett was picking up this the other day as well. So he obviously believes in it. Got a very nice little zone around here around the 38. So pull back down to the 38. You would probably find some more support. And then the real support lies here just under that, about 37, 33. 20 moving average and a huge amount of resistance across the board. So I like its moves. I don't particularly love this vaccine from what I've read about it. But that doesn't mean it works clearly. But they've got some problems, and we'll see. I'm not a medical expert, but from a TA perspective, the thing looks very bullish, but at the same time, there's some great pullback zones. And I think this time it will support this pullback zone. Now, I ignore this weirdness because I don't see that as technical analysis. I see that as fundamental news event, whereas now we've had some fundamental news event. We've had time to digest it. So any pullback now, previous resistance level should be respected with a 20 moving average. That's my thoughts. Looks bullish right now, guys, though, and we're above this previous resistance peak over here. Where to next? 42. Hey Arnold, US $3. Thank you very much, Hey Arnold. Good TV show, by the way. Back in the day, Nickelodeon or something. Love the channel. Could you take a look at Zoom? Yeah, sure, we can do that. Why not? So Zoom was on the rocket ship. This is kind of clear case of very similar to last time. Remember we talked about, I can't remember what the stock was. I think it was Neo. Neo was on that really big rocket ship movement, and then it just started failing at the key moving averages. You can see that when it failed really that 50, which was the thing that was holding this the whole way up, it started getting a bit shaky. We went from 580 all the way down. Now, we're trying to figure out last week or a few weeks ago whether we were in a blow-off phase for this particular stock. So we moved from 591 down to 363. Let's just draw a fib here of that pullback. Where's my fib tool? So one of the ways that I always like to look at a blow-off is that if you have a blow-off, generally what it will do is it will tend to strike back to around a 61.8, 78.6 fib. So it hasn't done that, just went straight back to a 50 and then started selling off. The key here is going to be the 20 moving average on the weekly. Let's just get rid of that. So this week we've opened up, we're opening at 411. You basically have to have this 400, 411 area hold, and that's because the 20 is the point of support here. So very, very important. Once we know that, we go into the price action. Price action went up high, then of course sold off very aggressively. 411's where we're at. We're going to have support around these previous lows. So all I'd basically do is draw up support around these lows. We're in the middle of in between that, and we've got a 20-50 cross to the downside. So I'd be tending to think more bearish than bullish here right now, down to the possible lows down here. And then if we get to this zone, you're hoping that it, of course, finds bullish pressure. There's nothing much else, though, on the more significant timeframes that you could say. 4 hour, nothing much going on here. Still looking at that 375 possibly being found this week. I wouldn't short or buy here. That's just the kind of way I look at it. I look for the key levels and the key zones. It's got a lot of work to do to go bullish as well. It's got to go through all these moving averages now. It's a good one on Zoom, but yeah, it's tough. Keep Life Simple says Zoom is doomed. Zoom, I don't think has a huge moat. I like moats. I think I've talked about that quite a lot. Moats are cool. When you have a extreme moat on your business, it's hard to get taken out. When it's hard to get taken out, that's good. Much less business risk. Though that being said, I would have thought there wasn't a huge moat on something like Afterpay. And I guess there isn't. But look at Afterpay go. If you're in Australia, you know what I mean. Crazy. Beyond Meat also has a very little moat there, Ralph. Beyond Meat doesn't interest me, but obviously from a TA perspective, you still get great levels. It's come back up. It's tested the previous support as resistance. It's struggling around there. Thing I would do, probably draw the lines in between here. We're getting a close underneath that. Or sorry, an open underneath that today. Probably signaling further shorting pressure coming into Beyond Meat. Possibly back down to this line here, the 120 support. Oh, I got a log on here. Sorry about that. So 138 currently. You see here log rather than reg. If you go reg, it'll be kind of improved. So logarithmic, what you're doing is you're basically looking for it to come back down to here. It needs to find support here, but a break close below there, I think really exposes 120. This is the critical zone, similar to gold. Bullish movement here, bullish close above this zone, getting through the 50 exponential here in the 4 hours, going to be super significant. Retest of the previous resistance from support, beautiful long. At those kind of levels, that's the type of TA that you're looking for. For the shorters, You can't really make too many kind of calls or decisions till you get underneath there. And then, of course, you would think that it's going to go back down, decline to 120. I tend to have more of a bearish kind of case on this particular stock. But, yeah. It's just more because I think there's a whole bunch of new companies coming in to compete with them. Bloodbath McGrath says, Zoom is just used to collect all your data. Most of those tech companies are just used to collect all your data. Keep life simple. No, we were saying that if gold moves above the 1850 and breaks high, it's the same strategy or the same concept as getting through here. Remember, if we get through this zone and break above, then things change. That's the TA. Something has changed in the market. We don't need to understand what it is exactly. You can if you want to try. But it's the price action momentum and the commitment of the buyers and the sellers. Let's just break down a candle for you guys. Let's break down a candle. Let's get a blank screen. Let me see if this actually works. Whoa, that was crazy. Did you see a whiteboard come up then? Let me have a look at the stream. I'll see if it comes up. If it does, I'll use that technique. That was wild. Have a look. Unfortunately, it seems to whiteboard the whole screen for me. All right, we'll draw it here. So basically, if you've got a candle, we teach this in our course, and if you're interested in finding out more, obviously you can check out our course at fxevolution.com. But think of it as a candle. This is what everyone sees, and they see a candle like this, and they go, okay, cool, that's a candle. But the point of it is it's more than just a candle. It's the time frame that you're looking on. Now, the time frame is going to be significant. The higher the time frame, the more significant the fight between the bulls and the bears is during this candle. Now, if you see a candle like this, and basically you're saying, okay, this candle here looks like it's bearish. It's done a shooting star type of candle. If we have that type of candle, are we thinking it's significant on a 5 minute? Well, yeah, it might be. Are we thinking it's more significant on a 1 hour? Yeah, it is a little bit. Is it more significant on a 1 week? Absolutely. This type of candle is very significant on a 1 week. Now, what really is it telling us? Well, at some point you might have had an open over here. So we've got our open, we've got our buyers coming in, and there's a commitment of those during the candle. Then the selling pressure comes in at some point, and it's worthwhile actually also taking it down to the smaller time frames and seeing what the smaller time frames actually what the commitment is. So let's say we have this candle, and then on the smaller time frame it's like this. Up, and then on the decline it looks like this. Think about this and what it means. This candle goes on to form this candle on the bigger time frame. What this is showing us though is there was some super hyper kind of way of getting in, and then there was a very well thought out commitment of the sellers throughout the process selling off. It wasn't just a knee-jerk reaction, it was a full commitment of the sellers. Very technical in the under market. That's therefore going to make this a much more technical type of candle if we get a close below, because we would expect further pullbacks and technical moves. If we see a move under before it going like that, then that's a very aggressive each way market. So there's more than just looking at the candle and saying, oh yeah, that's a bearish candle, that's a bullish candle, whatever. Think about the price action that goes into it, the market psychology. That's the important part. And until you think about candles that way, you're probably not doing it correctly. You're just following somebody's cheat sheet. You're following some random crap that you saw on the internet. And that's the reality. Not many people look at the way that candle is formed, the structure, the psychology. You don't need to know anything about, if you knew nothing about the news, you knew nothing about the Fed, you knew nothing about any of those things, you'll find that but by reading the candle and reading the stuff underneath it, you'll have a really great understanding of the mentality of the market at that point. And it's that mentality that you're trying to take advantage of. That's the lesson. Another lesson. And here we have put call ratio, and you'll notice it's getting quite low. So put call ratio will be something I'm looking at very heavily today. This is the weekly. Go to the daily though here. You'll notice it's getting right down to that level. We like to be able to say, okay, things are going to start looking to be bearish soon. Keep Life Simple says, wouldn't monthly and weekly candles be less relevant for daily moves? So a monthly, so let's say a weekly candle, it's going to be pretty significant to the daily closes. It's usually significant to 3 timeframes around, would be the best way to explain that. Frugaholic says, thanks, Tom, for your insights. I appreciate your time and learning. No worries, Frugaholic. Dow was 30K earlier. Yeah, so there are a few people coming in with the questions about the VIX. We'll look at that. So put call ratios, definitely declining. Remember, if you don't have one of these, look up options, expiration, US date, calendar, or something like that. And if you can get, I think MarketWatch has one. I'll share this with everybody. Let's grab that now. There you go. So if you're not aware, options expiration is becoming pretty important this year due to the massive amount of retail traders around. If we have a look here, December expiration is looking to be options stop trading on the 18th and the expiration is the 19th of this month. So that's going to be our very important kind of date that we're looking forward to in terms of options expiration. I think it's important to have these ones there, especially with put call ratios, because a lot of things are going to happen around these dates. Let's have a look now at the VIX and talk about that one. So volatility index, we'll use this one here. A few people alarmed by the spike in the VIX. I don't think it's that crazy. I said this the other day. Someone was like, VIX up. Yeah, but the VIX is not moving that hard. So 20 to 22, okay, that's a move. Let's go to the 1 hour time frame. Let's have a look at the structure of the VIX. I'm not really one that looks at this too TA wise. A few people have argued with me on this one in the channel. Basically, you could say, oh, well, look, a break above this 23 kind of zone, let's say on the VIX, is going to be significant, and it's going to show us a huge amount of bearish intent. The problem is that with the VIX, it has a tendency to do crazy spikes and then take it all back. So I just look at it as, yes, we're above a certain zone. There's a lot of volatility, and sometimes you're going to be able to do really good analysis on the VIX. Like when it broke through this channel over here that we talked about a few months ago into September, we knew that, into November, we knew that this was a really important zone. But it made sense. When it broke through here, we were obviously going into a US election as well. So VIX increasing is certainly good if you're a bear in the market or you want to see volatility come back in. But I don't think I'd be looking at it as anything significant until it gets above 23. Gio Franco says, for the moment, but bears are getting hungry and they will eat the bulls in the next few months. What are your top shorts for a pullback? Well, it depends what causes the pullback, because the pullback could be caused by lack of stimulus. Okay, well then you're going to have to focus on a certain sector, aren't you, which might be consumer discretionary. If the pullback is due to trade tensions, then maybe it will be iron ore that gets targeted. That's the problem. I usually just go with the index, the broad, and just go with that. So Jith, I'm going to look at BlackBerry because you're very consistent with asking for BlackBerry, and I'm just interested to know why the hell this stock's up. What in the hell? BlackBerry's moving. I thought this was dead. Let's go to the daily over here. It's not dead. Obviously, there's news there. From a TA perspective, I mean, yes, it broke past this $6, 580. 580 was closed above. That triggered, obviously, buys. It's well above now the 7. The 7's become support. I mean, what do you want me to tell you? It's gone crazy and it's doing its little thing. This is fundamental driven. It's not a good technical kind of pattern, and it doesn't have strong daily technicals. Your above key zones, like 7 is obviously going to be a hard point for it to get underneath now that's broken above. But yeah, that I don't know what you want me to say about BlackBerry, man. I'd want to know a bit more about the company. BB is a 5G play. Okay. A few people mentioning Activision Blizzard. We love Activision Blizzard. That's a giant cup and handle that you're looking at there. So I'm not really too big at the pattern, but basically, yes, there's like a flag going on here. It's looking pretty strong in terms of buying pressure. Now, they had, we're going into Christmas. They would have had decent sales. From what I understand, the new Call of Duty kind of sucks, but they seem to still be making lots of money from it. So for Activision Blizzard fans, you're really just looking at a break above 85. Break close above 85 is going to trigger a whole bunch of buys, retest, and then, of course, possibly the magical 100 that this stock has been looking for all the way since over here in 2018-19. Nice amount of consolidation here. So what they're saying by cup and handle is like, yeah, and then my handle. BlackBerry broke 12-year-old trend line. Yeah, I mean, it probably would have done a whole bunch of stuff off that kind of news. So this is the trend line you're talking about. It did. It broke it. It slammed it. But again, it's fundamentals driven. So yes, it's gotten through the trend line. But what are you going to do about it? It got through. It moved really, really high. How do we take advantage of this? Do we say, okay, well, we're up here and that means we're going back to here? It's really tough. For me, there's better plays. I also don't really believe in the company, but that being said, who knows? Swerve is very bullish AT, Activision. Yeah, we've been bullish that one for a while, just like our good friends at Disney. Look at them go. 153.40 now. Probably getting slightly overpriced. But I tell you what, Mandalorian Season 2, it's pretty good. They made a deal with Microsoft. There we go. Keith has said it. Yeah, I'm not on top of every single one of... Siddharth Molly BlackBerry is a bit tart for my taste. Nice one, Siddharth. I'm not on every single one of the stocks all the time. I usually focus on the big blue chip or big caps and just look at the TA. And what you'll find, a lot of traders, they usually only, some of them that trade stocks on daily occurrence, may only trade 5 or 6. May only trade 5 or 6. 3M is certainly an interesting company that we've looked at a little bit in the past. It's coming out of... You know, here's a little bit of a... Is this even a trend line? Probably not. Nah. No good. Get rid of that. So 3M having a nice little bit of a run up. Let's have a look here at the price. So the price action, 176, 180. So for me, got a 20-50 cross here on the weekly. That's pretty cool. Finally getting some nice price action coming through here. I would like to see a break close of 180, retest of the 180, and then, of course, follow on to something like a 220 high. I think there's a lot, well, 200 will find first resistance. So there's a lot of movement here for 3M possible over the next couple of months. 180 is the key level of resistance break. And when you get through that, you're most likely going to see momentum to the 200 and then maybe even momentum to the 220. Not bad. Very cool. Citibank, yeah, we'll check that out. And then we'll go back to looking at the other stocks. Citibank trades under Citigroup, does it? Nice movement up. This is the weekly here. Similar to the other banks. Very strong level here around 53. Previous resistance across the board. Be nice for a pullback. Yeah, I like it down here more than I like it up here. And I think these are due for a pullback in these aggressive runs. Too aggressive, needs a pullback. Let's take the fib of the whole move now. Let's take the Fibonacci of that move. Okay, so 38.2 would actually bring us back down to 52-ish. Well, that's where I would think would spike to, but the 20 would be my kind of aim. All right, we'll do one more stock because we keep getting asking about it. So we'll do DraftKings. Check out DraftKings here. Aggressive move still on DraftKings. Looks kind of like it had that blow off. Let's have a look at our fib retracement here. Fib retracement straight into a 61.8. Found weakness. It's trading at 49.39 right now. Ooh. It was a big decline off a big rally. I'm starting to think that that is most likely going to struggle a little bit now. Kind of the classic kind of decline there, followed by pretty sharp rebound. I wouldn't be surprised to see further declines here. But again, not statistically likely either way. It just because of the aggression of the short and the aggression of the pullback, and it looks, to be in line with one of those blow-off kind of events. One to watch there. If you're in it, I wouldn't be scared, but I would be watching. Thanks very much for the subscription there. Wheel of meme stocks. Oh, we've officially hit the wheel of meme stocks. Yeah, this stock here certainly is. Okay, back to the real market. Let's have a look at the market. Futures, across the board, we've got still a decline coming into the market open here, guys. Nasdaq 12,520. Very nice reading still on the Nasdaq. Nikkei ended up down 1.53%. Crude and all oils down a little bit. Crude was crazy. I tell you what, it was crazy expensive for petrol for some reason today. It was absolutely wild. Bitcoin continues to kind of hover around the area that we thought it might find some support. Ethereum continues to have that 620 resistance in its sights. Hopefully it can get up there and test it. Dollar index really copping it. So back down to where now we should see bulls start to hopefully get back into the dollar index. Before we were trading here, so at the start of the stream, we were about 91-ish. Now we're trading at 90.84. So a decent decline here for dollar index. Back down to where you've got 20 and a 50 exponential. Previous support, resistances, and a nice little kind of zone. Overall trend's been declining. Let's have a look at it on the 4-hour. Oh, it's pivotal that bulls pick it back up here. If the bulls are going to come back in, they need to do it right now. What's that doing for our little gold? Gold starting to find a bit of pressure buying. That's good. Hopefully we'll have an answer tomorrow whether the 1850 is going to be holding for the bears or for the bulls. Should be a very interesting night there for gold. PBW. Invesco Exchange. What is this? Clean energy company. So this is the entire ETF of clean energy. Is that correct? Yeah, this is looking great. It's looking super overbought, but it's looking great. Put on the Bollinger for this one. So we're pretty far outside of Bollinger, probably due for the pullback it's having right now. It's been outside a few times. You'll notice I'm using Bollinger with a few of these really elongated kind of crazy moves, and that's because it's the only way other than fib extensions or pivots or psychological numbers that you can really get to an area. And because we're using an ETF, it's going to be even more hard. So that's what we're looking at the weekly. Go to the daily. Delete Bollinger off this now. Daily, you can see it's basically been holding 50s a few times during the deeper pullbacks. There could be further pullbacks here. That's looking overbought, dude. Maybe a deeper pullback to the 50 is due because of the huge ramp that it's had recently. But this is ramping due to the US election. Need support to hold here. Close underneath that, I think, exposes the 50. That's probably what you'd be looking at. Close underneath the 20 moving average here, exposes the 50. 50 should be found with buying pressure like it has in the past. Cool. Nice investment if you're in that. Thanks very much for the subscription there. We definitely did look at Docu Adenasm. If you check out maybe 25 minutes ago, 30 minutes ago, we looked over Docu, talked about the levels and the important kind of zones that we were looking at from a TA perspective. Quite a few people seem to be getting onto this 5G concept. Seems to be the rotation of the retail herd right now. Everyone's in 5G all of a sudden. Interesting. Remember, if you're looking for week ahead news, we're always looking at, trying to make sure we have as much information as possible as traders. ForexFactory.com, not associated with them in any way, is not bad to be able to set to your time frame. You can see here it's 12:30 in the morning right now in Australia. It has like bank holidays, which can be important, red news, things like certain governors and people talking, monetary policy statement, of course, this week for the euro, and ECB press conference on Friday as well, my time. Important kind of things if you're looking at it, and we've got some meeting minutes, etc. So always try to have an economic calendar whenever possible. Let's have a quick look at around the news here. Just go to marketwatch.com. We've got very beautiful JP Morgan. What are they saying here? Let's have a quick look. I always love these ones. Said any near-term equity correction would be a buying opportunity as we are only in the middle of the current bull market. Oh yeah. Well, they would certainly be saying that because basically the market is signaling with its buying of financials, buying of energy, buying of all these sectors that of course have been beaten down over the years. It's signaling that we are in recovery phase. So how long will that phase last? On average, it lasts quite a few years, 5 to probably 8 years. ETF holdings of gold seems to be declining a little bit here. ETF holdings of silver have increased, it looks like. Probably in line with what we think. We're more bullish on the silver concept than the gold concept because it's used in economic recoveries. But realistically, you read all this news, And all this is doing is giving you a bias that could possibly be wrong. And the more you read of these types of things, it will kind of cloud your judgment. You know, we've all heard of the concept of analysis paralysis. As TA experts or TA kind of, people that want to be looking at that kind of stuff, analysis paralysis is a real thing. And a lot of the thing is when you read these kind of articles, you'll get that analysis paralysis. You'll look at Bloomberg, you'll refresh the page. Bloomberg will be like, the world is ending, as one of the crazy comments up here. And then you'll think, I've got to sell my position. You don't want to do that as much as possible. So all of these bits of things are really just news. Remember, the price action is already accounting for all of these bits of news. If you were seeing a double top and you saw this statement, okay, you might be able to say, okay, yeah, well, I am bullish long term. It's not really hard for them to say that they're bullish long term. But for the short term, we're looking at this double top. And then you just look for the next support line. And if you're bullish long term, that's where you want to be. Who cares what these dudes say? Doesn't matter what they say. It's like misinformation craziness over there. And I'm sure many people are very aware of that fact, which is good. All right, go over to the Webull kind of pre-market looks. We've got here set for 20 billion to really, really large, basically Apple. And we've got 510 matches, which is too many. So let's just quickly, now that we've got these increases, we have to go a little bit higher. So we've got 22 billion to get our big caps, and we'll go all EPS markets. So leading into today, looks like our biggest decline is in HCA. What else we got? DocuSign down 1%, still declining even after that good bit of news. Chipotle, that's a crazy ass stock. That is a crazy, crazy stock. I want to look at Chipotle. No one's been mentioning that recently. CMG, we'll check that out. Our good friends at McDonald's also declining a little bit here, now down from their high point. McDonald's should still have relatively good trading session, but of course, it's not really the best when you're going back into lockdowns. Lockdowns aren't really that ideal for them. JP Morgan, Goldman Sachs, a few other banks. Let's have a look at the winners. Moderna, Boeing, surprisingly. I think that was down before. What other ones? Tesla up 1%, trading around that $600 range. Zoom 410 now, was 411. Nothing too crazy for a Monday, which unfortunately does happen sometimes. Go to our US 500, still kind of struggling around this zone, 3688.9. Buzzblad says JP Morgan, the famous pump and dump company. I thought it was our good friends at Goldman. I like this one. JP Morgan chasing your money away. Bloodbath McGrath says, I guarantee you could have won that Discord account that you guys had going. Well, I might as well announce this in here as well if you're not aware. So for people that are in our private Discord community, you have the opportunity, of course, of submitting trades to an account that we run. And you have the opportunity, of course, then of winning the prize money in that account. So if you're interested in that, in 2021, I think I'm taking the account up to 20K. Currently sitting at 5K, and we'll move it to 20,000 with the aim of moving it higher and higher throughout the year. And basically, you can not only be more accountable, I guess, by submitting what we call Presic-based systems, but you can also learn a whole bunch, and we do reviews and that. So that's thanks to the community, really, and obviously we're just fronting some money. So I think 20,000 is a pretty cool little account, and yeah, we hope to get that one up to about 100K over the year. All right, let's have a look at what else we've got going on for this Monday. Go to the US 100. US 100 still pretty slow, 12,527. Basically, any pullback's going to be met by quite a lot of buying pressure around the 12.2. We've talked about that quite a few times. Probably covered most of the stocks I wanted to cover today. Have a look at Apple. Just kind of lined up every $5 increment. That's usually what you want to do with Apple. You'll notice it stopped at 125. It also, up here, it went a little bit crazy. It almost got to that 140. This kind of area was there. Dividend Cake says Disney to 150 price target, analyst said. Pretty sure that Disney's already sitting on the price target. Yeah, 125 is the next target for Apple if we continue to see strong market momentum. And I would probably say also for today, considering we're about, 1 hour, a little bit under 1 hour, 53 minutes away from market open, that the first hour is going to be the standard trap kind of hour for the retail community. And then after that, we should start to see a bit of an idea of what really the market wants to do. We've looked at enough Mondays now to know that the first hour is usually quite weak. It finds that weakness and then we get the next strength. If it finds heaps of strength in the morning, then it usually finds weakness after. It tends to do the opposite thing of what we basically see. Thanks very much for the subscription there, Mike Chen. Appreciate that. I do love Disney. Yes, that's right, Buzzbloods. Krunel says, what do you think of LiQWYD, NeoWave, TA? I like LiQWYD from the perspective of it gives you confidence to hold trades through waves, yeah? Or what you perceive as waves. I find it way too subjective. And TA is subjective. Like, let's face it, you need hard, fast rules. Maybe your hard, fast rules are based on body closes and conservative entries. Let's say you had a hard, fast rule of we get above 125. That's previous body close over here. We pull back and we're going to take that trade. Now, the problem with LiQWYD is going to be that you're always questioning whether you're in wave 2 or wave 3 or wave 5, which wave are we in? And I find it too subjective, but it's good for holding longer term positions and being confident in your longer term holds. Remember, confidence is key to trading. And when you're confident in holding something or you're confident in direction and you believe it, and no one's going to sway you from that, you tend not to make mistakes because you tend to believe in your concept. People believe in Bitcoin and they say, I'm not selling it. I'm hodling my Bitcoin. It's worth 400K. Now, are they right? I don't know. Probably not. But the point is that they've hodled it, they hold it, they believe in it, and it's like believing in a good company. Warren Buffett won't sell his Coke position. He just likes Coke. He's got that absolute confidence. So I think LiQWYD, from my perspective, that's the way I look at it. But it's way too subjective and super difficult to trade on smaller time frames. If you're going to be a day trader, it's so tough. All right, let's bring up our Koifin here. We'll be having a quick look at some of the areas that we may want to target this week in terms of sectors. So we'll use Koifin. If you don't have Koifin, the guy who made this, whoever the hell made this, is pretty cool. So we've got all these sectors over here. We can see all our sector analysis, different sectors and how they've done. We can click on 1 year and easily bring a chart. We can see how well technology's been doing. The big steep increase in energy. Check that out. October 28th was our low. We kind of talked about Exxon and all sorts of things there. Very nice increases there across the board. Financials doing amazingly. Real estate really not doing that great. Utilities coming back down off rotation, etc. If we go to 3-month gains, you'll notice that XLE is actually the best right now, which is pretty insane to believe. And some of the sectors that aren't doing so well, in comparison, XLP, consumer staples, probably the most defensive throughout this whole crisis. Now suddenly no one cares about it. Technology becoming unloved again because of its overpriced kind of nature. All of these types of things. This is what you do during a normal market. You basically look at sectors, you look at the trends of the sectors, you look at the time of year of the sectors, all of those types of things. And usually there's like rotation. So think of it as a giant circle. Basically right now, let's say everyone is buying Tesla. So they're all buying EV or a subsection or something like that. And what does everyone hate right now? Well, they did hate energy. So probably real estate seems pretty hated right now. Utilities are starting to get a bit hated right now. And even some technology is starting to get hated right now. So all of these areas are probably down here. So they've rotated through. So it's this cycle of rotation through basically 4 different blocks that you want to be doing. And that's how really a market works. It'll be like, this is the hot sector. All right, we're done with that one. On to the next one. And it just rotates around and around and around. What you don't want to be doing is buying at the peak up here. You want to be buying not down in the decline either. And you don't even want to be buying here where it's basically moving into being rotated into. You want to buy somewhere in this area here or somewhere in the bit where it becomes into the overbought. And when you get in here as a trader, that is the ideal area of the circle you want to be in. So right now, where are we circle-wise? Well, I think energy's kind of had its initial crazy run. Still more in it, but it requires OPEC and others. I think XLF definitely has had a very nice pickup and is due for a bit of a pullback. And I would have said last week it was all about materials, but materials have just started spiking pretty hard. So industrials remain a pretty interesting area, materials, and possibly even back into some technology. Consumer discretionary, I'm still terrified of. But yeah, maybe even some technology. Healthcare is only really just starting to kind of come back in as well. One of the areas I've been looking at, cybersecurity. How many companies have come on to the internet? What about cyber security for the next couple of years? Is that going to be a good area to possibly be looking at? Hey, maybe. Bloodbath, Bitcoin did hit that high. So he says Bitcoin's real all-time high is about 24K. Depends on the exchange. So I was trading during that time and it hit 24K in like Korea and some of the Zimbabwe and stuff. It was when you had a lot of different pricings across different exchanges. I wouldn't really consider it necessarily the highest kind of point though. I would say underneath that. Gianfranco says, last time JP Morgan said the market was bullish was 2007. Oh, that's a burn, Gianfranco. That is a burn. Tristan, I mean, you're entitled to your opinion, man, but I think that I'm kind of spot on with the rotation, man. Rotation is charts, bro. And I also think that cybersecurity makes a ton of sense. All right. What else is going on in the markets? I don't think that much. So about 45 minutes away now from market open. We'll quickly have a look at the broader, kind of charts here, see what's going on in all of the market indices. So we've got a few coming up here. Dollar index has continued its decline. It's really on that level where it needs to bounce off. If we have a look at the 1 hour, we'll see why. Very important zone. Gold back to 1838. Again, 1850 is the zone we're looking for there. And I would say that something like 120 is going to be a very key area for something like Apple. So 120, if it pulls back, previous resistance, support in the smaller time frames would be worthwhile. Yeah, there's heaps of companies that look decent, but the valuations are really the main concern. How much growth is in these companies, what the curves are, etc. That's why often we just look at the charts and just follow the price action, because it's much simpler than trying to do the full kind of analysis. All right, guys. Well, I think we're looking at a pretty kind of weak Monday coming in terms of analysis. We've looked at a whole bunch of stocks together. It's 12:46 for me AM, and I just don't think that there's that much excitement. Remember, the first hour of Mondays is usually the weaker kind of point, as in that's where the retail traders are. That's where you, me, everybody else is, and it tends to be the fake out hour. So look at the second hour and the third hour for more of a direction. Watch probably dollar index today. It's probably the one that I'd be looking at. Gold also around that 1850, 1846 high. May spike back up there. And of course, keep your eye on the VIX as well. And at the end of the day, we'll look at put call ratios, and we'll certainly be looking at Bollingers in tomorrow's video. So because I want to make you a great video for tomorrow, we'll definitely be checking that out then. And I think I might leave you for today. Krunal says fundamentals plus value plus charts equals always win. Yet charts are most important, because charts usually tell the fundamental history story. They certainly do, Krunal. They tell you pretty much everything about the story. But if you're not really wanting to be very strong on fundamentals, you can always just use the average. If you trade blue chips or big companies, you can use the average of what the expectation is. You can get things like that from finviz.com. You can get things like that from Koifin, etc. And you can use that as a bit of a guide of the next 12-month target. All right, guys. Well, thank you very much for joining us today for this Monday. We will most likely be back next Monday, though I do need to probably take a flight. So because I'll be flying, I can't tell you what time I'll be back. And it might be a little bit ambitious for me to come in the Monday. If it is, I might consider doing a Tuesday instead. And I will let you know and keep you informed. But I definitely will be flying, I believe. So we'll check that out. First time in a long time in Australia. All right. Thanks very much, guys. We'll see you next week for To Be Determined Day. And of course, as always, we missed last week's non-farm payrolls, but we usually will be doing those events moving forward as well. Thank you very much for joining us. And remember, if you haven't subscribed, definitely consider doing so. And we look forward to possibly seeing some of you in the private Discord community over the next couple of months. Bye for now.